Alright, so welcome back to another video. In this video, I'm going to show you how to correctly use ICT order blocks. Okay, and I've even have a recent example to show you how I utilize it. So disclaimers aside, now that we have established what I'm going to say, let's move on to the charts. So order blocks. All right, let's start off with the weekly chart here. For this week, I took this trade right here. Okay, let me just show you. Right on the position trader account, this trade right here. Right, what can you see from this weekly candles here? Right, we have this month's open over here, and we took out the previous month's high. And when you look at NASDAQ, it did not take out the previous month's high. Therefore, we have SMTs on the highs. Now that we have SMT, I'm waiting to see if we can close the weekly candle below these two up close candles. Okay, now this candle here confirms that. So this candle closed below this up close candle here. When this candle closed right here, during the weekends, I was basically looking for a short entry within this up close candles. This is your bearish order block. Alright, I'm looking for short entry within this bearish order block into the monthly fair value gap. Right, because we have SMTs, we're probably going to get a lower time frame reversal, and if there is a lower time frame reversal, we're going to reach into some sort of a higher time frame inefficiency. Alright, so on a weekly chart, we have already reached into this inefficiency. The next higher time frame would be the monthly, and which is where I got the monthly fair value gap. Right, heading down into the daily time frame. This is the Friday's candle, and this is the Monday's candle. So during the weekend, I placed the limit orders here. Right, for paper trading account, you can do that, but on a live broker, you have to put your orders in on Monday itself. Okay, so anyways, do you notice that Friday has closed below this Thursday's up close candle here? So this validates it as a bearish order block. Okay, and once it does so, it is reasonable for me to put a limit order here at the opening price of the order block and my stops above the order block right here. This order block is also within the the weekly bearish order block. So we have higher time frame in syncing up with the lower time frames. So this is one of the higher probability setups that you can actually find. Right, when higher time frames sync up with the lower time frames, you're going to have low resistance liquidity runs. So on Monday, weekly open right here. We traded up all the way into this order block here, and then eventually closed lower. And then after that, on Tuesday, Wednesday, went into the targets right here. So this is one example of how you can use it on the higher time frames. Right, but obviously your stops have to be quite high in terms of like the amount of points, right? But if you're expecting a low resistance liquidity run, you shouldn't receive a lot of drawdown in terms of your entry, right? So you can actually use two entries. You can use the midpoint of the wick, because this candle here has a huge wick, and the second entry would be the opening price. I used the opening price because when you take a look at this price run down here, it's high resistance liquidity runs. So I wasn't anticipating that to change, right? So I'm allowing the candle or the price to trade up into a deeper premium with regards to this bearish order block, right? So I'm allowing it to trade all the way up into the mean threshold, which it almost did, but failed to do so. Alright, so that's the whole idea behind me putting a limit order here, stops here, and then targeting the monthly fair value gap. This is on the daily, right? So you're basically trading the weekly range. You're capturing the weekly range. So as you can see, I caught the weekly high, right? Not so much of high, a few points away from the high, and then a few points away from the low was my exit right here. The high is right here. Okay, so you're done for the week, right? For this type of trades, you're done for the week. There's no need for you to chase anything anymore, right? And this type of trades doesn't happen often because you rely a lot on the higher time frames. That makes sense here? Right, so you're basically waiting for a higher time frame external liquidity, like for example the monthly highs and lows, to be taken out before you seek the other side. Right, so let me show you another example of what I took yesterday. It was on Thursday, right? So this is in another account. I believe it is the YouTube account. Yep, right here. So yesterday we only have this Tuesday's candles data, right? I understand that we are going to reach down into this lows right here, but I see there is a daily fair value gap above. So I was anticipating price to reach up into that fair value gap before trading lower. That was what I anticipated. Okay, therefore during the the London session on the 15 minutes, this is what I saw. Right, let me mark out the London session here. Right, Asia session was in consolidation, which means we're most probably going to have a very clean, nice, low resistance liquidity runs during the London session. Okay, so during the London session at 2 a.m., exactly at 2 a.m., we took out Tuesday's low. Tuesday was a consolidation profile with generating liquidity above here and below here. So during London we took out the sell side liquidity first, which means we are most likely going to run to the buy side liquidity, and it makes sense because there is a daily fair value gap above. That fair value gap is going to act as a magnet for the price to want to draw to it. Okay, and for Asia we have relative equal highs here and this Asia high here, right? As you can see, price refused to take out Asia's high, instead went straight down into Asia's low. Okay, so what I did was, initially I only have this up close candle here as the potential order block, right? If you can see, if you watch my NQ live execution videos, you'll be able to see, this is the most recent one that I posted, right? You'll be able to see how I took this trade and how I managed the trade and what was I anticipating during the trade itself. Okay, so I was framing this order block here as a potential for support if I get any candle closing above this order block here, which we got right here. But prior to that, I was actually waiting for another down close candle within this order block. Okay, so we got it right here. Right, notice this candle here. So when this candle, this up close candle, closed above this down close candle, immediately this is a signal for a change in the state of delivery. right? So with this order block here, I took a long, coupling it with this inversion fair value gap here. So my entry was at the high of the inversion fair value gap. My stops initially was down here. Okay, this low here. It was not a swing low yet when I placed the limit order, because this candle has just closed and we are trading this candle here. So I was anticipating this candle to trade lower, right? But my stops were here because right at this low, it's a 5 minutes swing low. Right here, as you can see, 5 minutes swing low. Right, so my stops is over there. That swing low is a good stop because it's also beyond the bullish order block here. And if you look to the left, we have traded down into Tuesday's low with a low resistance liquidity run. Right, basically you have no retracements. So this to me is a very good candidate for a reversal profile. Alright, so reversal profiles, what I mean is V-shaped recoveries or V-shaped reversals. Because it went down with this speed, it's going to match up the speed when it goes up, when it reverses. That makes sense here? So right, you can see right here during this reversal, there wasn't really any entries available except for this. Right, so I entered off this high of the inversion fair value gap, and I was targeting Asia's high, right? But I took an exit right around here because time was up, right? My stop loss cutoff time was 4:30. So, by I think 2 minutes before 4:30, I closed the position because it was not willing to run above these highs. I mean, it ran above these highs, but was not willing to speed up into Asia's high, which is not what I want to see, because that could be the price wanting to generate more liquidity above here, and then I'm going to have to endure retracements back into the range, which is not what I want to see, right? So I took my positions off at that level during that time. All right, so same framework applies. Higher time frame stops, lower time frame shift in the shift in the state of delivery. So that is how you can utilize order blocks, and that is how you can find high probability order blocks. Okay, and yep, if you line it up all together with the opening prices and knots, you see power of 3. So consolidation, manipulation, expansion. Right, if you take a look, this is the daily opening price. I'm buying below the daily opening price. This is the midnight opening price. I'm buying way below midnight opening price, so I'm buying a dip discount. Right, so newer ICT traders would see this as a fair value gap that they can short to, or they can short from, right? This fair value gap here on our hourly chart, right? I like to see this because false market structure shifts have the most explosive moves. Okay, so whenever I am trading reversal, or whenever I am anticipating reversal, I would like to see some form of a false market structure shift. Right, so for another example, let's just say over here, we took out Tuesday's low and then we traded up all the way into London's high, but we failed to take out Tuesday's high, which is also the daily fair value gap's low. So we failed to trade into that level, and then right here, as you can see, we have fair value gaps here, and then we have fair value gaps here. So this looks like what? Bullish fair value gaps, right? Stop hunts taken, reversed higher, market structure shift above this swing high here, and then you have this bullish fair value gaps. I sat through the entire AM session thinking that the terminus or the final objective is London's low. Okay, but I've explained more about this in my other videos. If you would like to learn more about why I was anticipating London's low eventually, right? It's basically seek and destroy. Okay, you can look up to my videos and see how you can anticipate them, right? So for seek and destroys, you can anticipate them way before it happens. Okay, so that's just one thing that I would like to let you know. And with this, I'm gonna end the session here because this video is all about order blocks. All right, and I'll talk to you again. I'll end the video now. I'll end the video here. Grammar mistakes. All right.